What's going on, everybody? This is Travis from Carter Cow Capital. This is another night episode of Trade with Travis. Hope everybody's doing very well on this Tuesday evening. Hopefully, you end up having a pretty good trading day. My day was okay. Had a little bit of highs, I had a little bit of lows. One of my accounts, I got into about 5 or 6 trades, only to be able to lose $10 for the day. But another one ended up doing pretty well when it came down to that movement. But obviously, still got a long way to go when it comes down to what's happening over the course of the next few days, and kind of building up to the FOMC meeting minutes that's about to happen. So hopefully everybody's doing very well. In this session, what we're going to end up doing is taking a look at some of the trading pairs that we end up getting into. That includes NAS 100, that includes US 30. There was a couple of trades that we ended up taking in the morning where I ended up taking losses on them very quickly, and we'll talk about those. As well as a few other things. If there's some pairs that people are interested in being able to talk about, we'll talk about those as well. So let me go ahead and go through the disclaimer, get that out the way. I'm going to put that on the screen, and then after that, we'll go ahead and get started. And while you're here, make sure that you end up popping in and saying, hey, it's always good to be able to talk to new people if you are new. For the people that typically end up popping in and end up saying, hey, it's always good to be able to talk to y'all as well. Everybody knows that we're trying to build out a strong community of traders that hopefully we can be able to make some money together. So here we go. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from the education, you can be able to make your own informed decision. Now, understand that trading involves risk. It involves risk of being able to make money, also involves risk of being able to lose money, so please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you end up making money today. So with that being said, I'm trying to make sure that my good folks over on the tube can be able to see what I'm doing for this overall session and everything else like that. So give me one quick second just to allow them to be able to get in, and then after that we'll be good to go. Let's see. Here we go. Saving those. Let's place in. Hopefully the good old guy, hopefully everybody else on the tube can be able to watch, and we can be able to go from there. All right, perfect. So let me get this off my screen, and let's go ahead and talk about what's going on for everything else. Here we go. Economic calendar. What is going on tomorrow? What is about to happen? If we go to fxstreet.com and be able to take a look at it, obviously we didn't have that much news today. The consumer price index for oil, for the Canadian dollar, actually ended up being pretty bad. Excuse me. President Lagarde ended up speaking, ended up speaking a little bit earlier today about what was happening with the Eurozone. And then after that, we have a couple more speeches that's going to happen in Canada and Australia, respectively. Tomorrow's going to end up being the interest rate decision at 2 o'clock. I'm going to talk about my game plan and what I end up doing from an overall strategic perspective when it comes down to every pair that we talk about. The strategy is very simple. The thought process is very simple. We just make sure that everyone can be able to fully understand it when it comes down to that. I have a hard line rule when it comes down to trading anything that is happening for its high impact news. And this is one of those days where we have to be able to talk about it because we want to make sure that everybody understands what they're doing. Now, Japan is going to end up having an interest rate decision as well. So that'd be something we have to pay attention to as well, even though this is not necessarily a fundamentals day because there's only two countries. There's only two countries that have high impact news. Both of these news things or news cycles are going to end up being very important to how the market's going to end up moving. So we just got to keep that in mind as we go through and take a look at some of the pairs. I'm going to get into the big three a little bit later on. Let's talk about the pairs that we actually end up getting into. Matter of fact, let's take a look at oil. Let's take a look at oil right now because market has literally just broke on that pair. So may have an opportunity to be able to get in. I'm glad I looked at that first because if I didn't, then I probably wouldn't have been interested in probably taking an entry. Hold on. All right, so this is what happened. This is what we talked about earlier today. Market was in consolidation. There's a chance that the market could go all the way down to 77.11 for its overall movement. or $76 with the next pivot when it comes down to the position. Market ended up breaking out of consolidation a couple of days ago, consolidated again, and currently right now it ended up breaking out of consolidation based off of this continuation pattern or this upward channel that you want to be able to take a look at to the downside. Now, with that being said, when the market ended up breaking out, this was the retest area, and since then the market has failed. So I am comfortable with being able to say that I would be interested in being able to take a sell trade. Now, the only thing with that is, one, is the equity management going to make sense? And in this case, yes, it will if we're taking it all the way down to 70 to 77. And I believe that we end up getting a better number than what we did previously. So see what's happening with the 15 minute. 15 minute is getting close to being oversold. There might be a chance that the market could bounce back up. I don't think that I'd be too upset if the market kind of gives a little bit of a point up, but I know that I'm not going to be looking at this overnight. So I'm probably just going to go ahead and place in this pair and see if we can be able to get something off of it as this market is starting to be able to move down. This will be the first trade of the day. Typically, now I'm going to say this in general. Typically, I do not take trades on pairs right before high impact news information. I don't think oil is going to end up being one of those things that may end up being impacted by that one. So this took a sell on oil. Thought process is being able to sell it down to 77.11. 77.11 was the end of that vortex movement. We end up going from there. Stop loss, I ended up placing the stop loss at 87.04. 87.04 is just above the consolidation high. 87.04 is just above the consolidation high, the resistance of this overall spot. That gives it a little bit of room so the market can be able to make its movement to the upside. If you're using a position size calculator, essentially what you're going to be doing is risking about 62. I'm sorry, let me say that over again. Risking about 12 points to go after, what was it? If we do 1%. 12 points to be able to go after 26. But even with that being said, I think it's pretty good. I think it's a pretty good position. We've been looking at this for a while. And if we take a look at it from a 2-hour perspective and a daily perspective, the market's still in a position to where we have a chance that it could continue to keep on falling. Daily was in the sell zone a couple days ago when we first got into the trade. Finally, we've seen that the market has broken this consolidation and starting to move down. We're in the midst of the first 1, 2, 3, 4 days of the market falling to the downside. So typically you have 7 to 11 candlesticks between the sell zone to the buy zone. So like I said, I feel comfortable with the trade. I'm going to go ahead and take it. We'll see how everything kind of plays out on that movement. Okay. So good luck to everybody who ends up taking this trade. We'll see how this one kind of plays out. It'll probably take about a day or two to kind of see how that kind of swings out. So if it gives you a great position to be able to make profit, but you have to get out because the market actually ended up making a movement to tell you that it was ready to get time to get out, then just do that. But ultimately, I feel pretty good about that one. Let's take a look at what's happening with gold. Since we're doing the big three already, we take a look at gold from an overall position. Currently, the last time we ended up taking a look at this market was in a long-term consolidation from 1685 all the way up to 2070. I said that I wasn't looking at getting into a sale until the market broke below 1685, and I was trying to ride that trade out until, what was it, 1658. So when the market ended up hitting take profit at 1658 after that first drop of movement, I'm going to show that off of the 15 minutes so everybody can, off of the 1 hour so that everybody can be able to get an idea about what we was talking about. We had a small consolidation a few weeks ago, or not a few weeks ago, a few days ago. Market went into consolidation when it broke. The first time we got into the trade, it stopped us out. And then after that, the second time that we got in, it ended up breaking down from 1685. Literally took about 7 to 8 hours before hitting 1658. Currently, right now, the market is still in consolidation. I have a trade that's ready to go at 1658. The market does break down with a stop loss of 1681 and a take profit of 1615 if that does happen. That is a pending order trade. So if you want to go ahead and place that, then you may be okay for us being able to do that. VJKC, when it's FOMC, it's going to end up being tomorrow at 2 p.m. Eastern Standard Time. So I'm in the States. I'm New York time. So It ended up being 2 p.m. or what is that in 24-hour time? 14, 15, somewhere around there. So you end up seeing it from now. But while I'm actually looking at this, I'm going to go ahead and place in this trade as well. Get that out the way. So I'm going to go ahead and place in my pending order trade for this one. I forgot to do this yesterday, but we actually got time to be able to do it now. So it'd be a pending short. It'd be at 1658, 1658.50. Let's see, short 1658.50. Stop loss I have at 1681. And the pause now 21. So if it's 21 hours for you, that means it's 9 o'clock, right? I mean, that is 9 o'clock for you. Simply put, let's do to make it even better. If you go to fxstreet.com and get ready to place it inside of the chat box, in the settings filter, what you can be able to do is click on that filter, and it will end up having your time that you can be able to go off of. Where is it? This week, about default. Okay. Let's see. Apply filter. Oh, there it is. You can click on to this and basically match it up with your overall time that you're in for your overall location. Once you end up clicking on to that, then it will change up the times on the left hand side for you. So tomorrow FOMC for us, where I'm at, it's going to end up being at 2. With Ethereum drop or not, I'll take a look at that in one quick second. I'll give you my opinion on that one. But make sure I place in my whole thought process on this trade. I got 16, 15. I'm going to say 16, 16. Have to take profit. Let's see. And this is placed in as well. So I have that pending order ready to go when that trade triggers as well. Okay. About 871. Okay. Nominal loss. Okay. All right. I'll take a look at it real quick. Matter of fact, we can take a look at that now. I got to go into the trade review page anyway. I typically go by taking a look at what's happening with Bitcoin first. So I'm going to start off with Bitcoin, and then after that, I'm going to branch it out to Ethereum to be able to answer your question. All right. So what's happening with Bitcoin from a weekly perspective? The market is in a downside move. It broke below this high consolidation at 29,000. When it broke the support, fell all the way down to 18. Now, there's a good chance that when the market made this retracement only to the 23.6, that meant that the market could fall all the way down to basically 8,300 before there is going to end up being a strong push up to the upside. Now we look at the previous support that is happening in this area. That could be necessarily true if it does fall down that low, which is a scary fact for people that have been trading this for a long time. But that is one of the next areas where the market could go. Now, from a daily perspective, we see that the market is in a smaller consolidation and it has not broken as of yet. And because it has not broken as of yet, there's really no move to be able to make. But if the market ends up breaking below 18,240, it's going to end up going into another free fall. From that free fall, obviously the market could be able to go into a couple areas. But the next position where it could end up from a Fibonacci perspective would end up being at 10,835. So with that being said, there's no move on it yet for the overall direction and being able to move to the downside. But more than likely, if I'm seeing the same thing right here, we would see it on Ethereum. Now, kind of going back to if you ever traded with me, then you would know that I don't like trading consolidation. I am a huge non-proponent of trading consolidation. I just don't like it. But I do like being able to take advantage of when the market actually ends up breaking out of that position. So we take a look at what's happening with Ethereum. Ethereum was on its third downtrend swing. The market ended up retracing all the way to the 618 when it went to 3,600. From going to 3,600, there's a chance that the market could fall all the way down to 720 based off of this position. Now, market has broken an inner trend line and a outer trend line, so that means that the market is somewhat bearish. The problem is that the daily's in a buy zone, and typically when news like FOMC statements or anything else like that come in, it ends up affecting the cryptocurrency space as well. So I am kind of curious to see how this market is going to end up reacting. I would assume that the market will end up retracing and trying to retest this overall outer trend line first before making a move. Which means to me, even though that there's a true counter trend line break, I would be a little bit hesitant in being able to make a move off of this one. I think what's going to end up happening ultimately is that the market may end up creating a channel that's kind of going to the upside, and then from that channel, we may end up seeing that it may end up breaking in one of those directions before being able to go. So currently, right now, when I get into it, no. If you are into it, then there's a better chance of the market kind of bouncing up just a little bit before being able to retrace. So I would just say be a little bit more careful when it comes down to that. And that may end up hopefully that answered your question. But you got ETHW. That's not Ethereum. What is that? Let's see. I'm going to pull it up on one of my charts. Let's pull it up on another one. Let's see. Because I might have said all of that stuff, and that probably didn't help you one bit. Let's see. Oh, okay. Well, geez. Okay. Yeah, that really didn't help you out. Geez, I didn't went through Ethereum off or nothing when it came down to that. Sorry about that. Let's see. Take a look at it from here. You got it on OKX, but I'm seeing it on Bitfinex, so I tried off of Bitfinex real quick. Data perspective, high was at 61. It fell all the way down to 6 when it came down to its movement. We take a look at this from a 2-hour perspective because we don't have that many candlesticks to be able to work off of. Few things have happened. I'm going to start off from here. Market built a somewhat large consolidation block. Let's see. Where is my... Oh, there you go. All right, market ended up building this consolidation. Then after that, had its run to the downside right here. Consolidated again. Very tight. Then after that, fell down to this overall vortex area right here. Right here. Let's see. Euro NZD double top. Good for sales. I agree that's a general statement. We'll take a look at that one. Consolidation again. Once that ended up happening, we end up having another drop right here. Then after that, we end up having another consolidation right here. Everyone, y'all gonna end up noticing the pattern. This is a very simple. It's a very simple way of being able to trade, but it takes a little bit of time just to be able to spot it out. So vortex area right there built up a larger box consolidation for here to here. Once it ended up breaking out of that number, obviously we're down at where we're at right now. Okay, so Okay. So essentially, this is what's happening. The market's showing a little bit of a rebound, but obviously the market's still bearish. At this particular point, when you end up getting in at 871, I don't think that's necessarily a bad spot to be able to say that you want to be able to want to keep on staying in. I just think that you probably thought it was going to end up making a little bit of a U-turn out there, end up hitting this double bottom that happened right here. So it did that. Then after that, did that. That's a terrible color with red candles. Let's try this one more time. That's the brush here, and then after that here. You thought it was probably going to end up going up based off of that movement. So essentially, what is happening right now is this: when the market ends up falling, right now we're kind of seeing that. I wouldn't call it natural consolidation yet, but I do see that the market has a collection of candlesticks that haven't broke that high yet. Because of that, if the market ends up breaking above 720, a point 7.16, 7.17, then you have a good chance of being able to see that this market may start to be able to push back up. The only problem is that the area that you end up getting in at 871 is now the new high volume node that's actually in that area. So if it breaks above your 871, then it has a very good chance of being able to run back up to that 13 number first. But you're going to have to be patient with it just a little bit. Obviously, it's a long-term hold, and it's going to fill down to a pretty good position. Don't be surprised if it does break out. It will get up to $8, but it probably won't get up to 871 as quick. But you got a chance on being able to make some movement off of that one overall, but it's going to take a little bit of patience on that one. We'll take a little bit of patience on that one. Euro NZD, let's go ahead and go through it real quick. Answer this question: Euro NZD, are you buying or are you selling? Well, obviously you're looking for sales. You just said sales. Let's see. I'm gonna clear this full screen. We took a trade on this one at 164 a long time ago, and finally done popped out of that position. So let's see. Clear the screen. Doing a little bit of top-down analysis. From a weekly perspective, godly, this is an ugly chart. Huh, okay. It's always good to be able to. It's always good to be able to see that people think the same things. It's always. I think it's always cool when I end up finding somebody that has a completely different thought than what I have. It's always cool to be able to see that. Okay, so here's the deal. The problem is that obviously this market has been in consolidation for a very long time. We can see that obviously if we want to say that the market is trending, all right, well, let's say if we just want to look at the trend and see if the market is trending overall. We have that spot. We can say that, okay, well, this market fell all the way down to the 618. So here goes your A, B, C, D. So A, B, market went to the C. It's breaking the B as we speak right now. So there's a good chance that the market could go up to 1.7610 for the overall movement from a weekly perspective. So the weekly, in this case, will be considered to be bullish. There's still a little bit more room when it comes down to the stochastic to be able to see what's going on for the movement as well. Now, future rich man, I'm going to answer your question in a second. As we look at how the market is moving right now, obviously we got a counter trend line break. This done happened. Good night. Okay, counter trend line break. This done happened. We have to treat the market as being bullish. I'm going to go to the daily. The daily has did a couple things. One, the market ended up breaking a when the market ended up falling down to this C, which meant that um, we could look at a potential bearish crown, but the top of the crown has been broken. So essentially now we just go back to this fractal low right here. That goes your that was your ABCD movement. Let me see, is this a lower price? Okay, I was right the first time. So market ended up completing the extension and has not had a fractal high to be able to work off of. So from a Fibonacci perspective, we're still not in a position to be able to even look at being able to make a movement for next one. With that being said, I believe that the market is bullish, but I don't believe that there's a great position to be able to get in and be able to get value yet. So I wouldn't do anything with it at all. I wouldn't even look at being able to sell it. But at this point, there will be a counter trend line break that will happen at some point in time. Obviously, we see that the market is definitely overbought at this particular point. But I will only look at doing buy trades at this particular rate. And based off of that, I will have to wait for the market to be able to give me a counter trend line break before actually being able to truly get into this move. So for me, I wouldn't do anything with it, this personally. The movement to the top may end up being a double top. It may end up being any type of movement from there, but nah, I wouldn't make any movement yet off of this one. What is the best indicator for buying options? So I would put it like this. It's not even necessarily buying options or whatever style of trading that you're actually doing. When I look at the stock market, cryptocurrency, Forex, index, anything else like that, you can have the same setup, and the only difference is it's just a chart. But obviously, when you're looking at buying options, you're talking about calls and puts and everything else like that for it being in, and you got a certain amount of time that you decide to be able to stay in for that movement. So my question to you is, are you looking at this from a swing trader perspective? Are you looking at this from a person that is trying to day trade or intraday trade? That'll kind of put me in a better position to kind of give you my thought process on that. I do like the MACD. I do like the RSI. Average true range is always good when you're trying to find stop loss and everything else that goes along with it. Obviously, if y'all know, I love trading bottom profile and being able to go from there. Stochastic RSI is my way of being able to look at overbought and oversold signals. Um, but anything will, I think, if I'm putting together any type of like setup for like indicators and everything else like that that I would look for, one, you got to remember that there's three different markets, right? There's the trending market, higher highs and higher lows. Typically, your stochastic RSIs, your MACDs, your stochastics by themselves, moving averages will do very well in those trading scenarios when the market is truly giving you a direction. Then there's consolidation, and it is a complete opposite of what I end up saying with like the MACD, the stochastic RSI, and all those other things. One, because they don't look at buying when it comes down to movement, and two, because when you end up taking a trade like with a moving average crossover, if the market is in consolidation, you're taking the trade directly in the middle of that consolidation most of the time. So, or even with the stochastic, when you're looking at it, especially when the market is in consolidation, most of these areas or most of these types of trades inside of that consolidation is false breaks or false times to be able to get in. So you got to have something that will end up spotting out consolidation. You got to have something that will end up allowing you to be able to get in with overbought and oversold signals when it comes down to trending markets. And then after that, you have to be able to find that explosive trade area. And most of the trades that we end up taking, especially in this one, I really love trying to be able to exploit explosive trade areas. It's a quick and easy trade. You can be able to get in for, sometimes even a day, sometimes less than that. Be able to get more movement than what you would end up getting, whether if you were just trading just a regular trending type of mode. And it allows you to pick your spots in the best positions. My only thing would be, if you end up doing that, how would you end up placing that trade in for its time with options? That's the personal thing that I wouldn't know. But I would say some type of volume indicator that can be able to spot out when the market can be able to exploit the overall areas like the stochastic. I'm sorry, like the volume profile. Um, VWAP is always a good one. Um, that allows you to be able to take a look at the weighted price based off of volume. Um, and then after that, obviously your MACDs, your RSIs, anything else like that. But indicators are just half of the battle. It's just you really got to understand price action, because sometimes I don't even look at the really and truthfully. Sometimes I don't even look at the stochastic or don't even look at the indicators. I just look at the price action and seeing what it's basically telling me. Trading is just like history. Uh, History doesn't change in certain areas. So once you end up understanding the history of that price action, it allows you to be able to make the best movements based off of how the market kind of reacted. I'll give you a perfect example. If we look at this market on the 15th, when the market ended up breaking down to the bottom um, and ended up having that free flow of an area. As soon as it broke back into those numbers again, you end up seeing this large, rapid movement to the upside, right? Large, rapid movement to the upside, large, rapid movement to the downside. So when this market breaks into this area again, right around 11,890, we can almost guarantee that the market is going to end up having a free rapid area all the way up until about that point. And if it falls, then we have a bigger area that we can be able to go after when this market actually ends up falling to the downside. It could always go down there, right? So the simple thing would be, why sit up there and fight with everybody in the middle, right? I'd rather go with the winners and the ones that I already done made that decision, and then after that, go from there. Let's see. Hey, Travis, what's going on, Steve? And Steve is an OG at this particular point. I hope everything's going well. Boosted positive, and we'll watch the beginning later. Nice. Okay, cool. Um, Hopefully you end up having a good trading day today. So I'm going to talk about this quick game plans for how you get the bottom to the side. If you end up getting the paid version of TradingView, um, they end up having an indicator that you can be able to go to, and once you end up looking at the technicals, you can click on bottom profile. The one that I have on the right hand side of the bottom visible range, a bottom profile, you can change the colors, you can do everything else like that. The one thing that I do like about this one, compared to the one that I have on MetaTrader 5 that I had to build my own self, is that it will give you the values. And sometimes being able to take a look at these values, you can be able to see a large disparity between one area of price and while in the difference between the buyers and the sellers compared to another. So to give you an example, like when the market ended up breaking from this position from 40, it had 47,000 people. I'm guessing that's buyers and sellers right there. And then after that, it legitimately dropped from that to 26,000 and 25,000 respectively. So when you end up having those huge volume drops of overall movement, that's when you end up getting those violent drops. That's when you end up getting those violent drops of movement. I'm giving a lot of game tonight. Good night. So, game plan. Very simple. FOMC is going to end up starting off at 2. So that means that the London session, the beginning of the U.S. session, I believe that the market is going to end up being consolidated, and it's going to end up building within these overall consolidation points that have already been built up for the last 4 days. So natural support is at 30,000, is at 30,570. Natural resistance at this particular point is at 30,930. So as long as it's inside of that area, I would like it to be. I like to be able to stay around that area until some news actually ends up breaking. Keep this in mind. The closer the time to the actual news, the more stagnant and the more kind of bunched up that the market will end up being before the news actually comes out. I always give myself a 15-minute rule when it comes down to being able to take a look at what happens. And essentially what that means is, let's say if news comes out at 2 o'clock, I wait until 2:15 to truly make a decision on what's going to end up happening. That means that everybody else can be able to fight to be able to see what's happening with the overall movement. And after that 15-minute fight, typically you end up getting an idea about where the market is going to end up going. So the first 5 minutes, the market may end up having a big push to the upside. and then after that fall down to the downside. And then after that, it may end up consolidating from there. After it ends up consolidating, then after that, you have some news to be able to work off of, and movement to be able to trade off of. If it breaks to the upside, you already know where it's going to end up going because we have a block off from the last time the market was in consolidation. My odd on favorite will end up saying that the market will end up dropping, because if it drops, it has a good chance of being able to break below 29,000, and that'll be the first time in a while if it does do that. It's the same game plan on every one of those pages. I mean, on every one of these ones. You can see that on Dow Jones. You can see it on US 30. Obviously, if the market breaks below 11,700, there's a huge drop that could potentially happen. It could break up to the upside of 12,165, and then after that, fall back up into this 1,500 point drop that ended up happening before, or really and truthfully that 800 point drop once it ends up getting above 12,470. As you end up taking a look at those and DAX and all those other pairs, you'll notice all of them are giving you the same thing. But I would not make any move until 215 for it being able to trade. Now, if you have to trade early, pick your spot by being able to place in a pending order and not a market order. You place in a market order right during that heavy rotation of consolidation and a lot of volatility of people actually getting in because people like to trade the news. Then slippage is going to end up being involved with it, and you're probably not going to get the best number. So if you're already placing your orders now, and to be able to protect yourself, use the trailing stop, then you should put yourself into a very good position to be safe off of it. Typically, when it comes down to news like this, or news that's going to end up coming out, I particularly say a 35 point trail stop will get you in the profit and will allow you to be able to make something off of that movement, because typically if you're going to end up having a quick, fast movement, it'll probably end up being about 70 to 80 points. And then after that, maybe consolidate a little bit and then try to make a movement from there. But got to keep your eye on it when it comes down to the news. You may end up having a big push in one direction, kind of like what happened the last time the news came out, or you may end up having the market go back into another large-scale consolidation and be able to go from there. Okay. So that's all I got for today. I end up getting into U.S. oil. Currently, right now, the market is in consolidation. Not consolidation. Currently, right now, the market is not moving as much right now. Not necessarily mad about that. We'll just see how this market kind of ends up making its movement overall before. As the market makes its movement overall, we'll see how it kind of going to end up playing out. If it breaks above this, if it breaks back inside of that consolidation, then that's an early exit for me. But currently right now is outside of consolidation, outside of that overall move. We'll see how everything kind of plays out. If it starts pushing back up into the middle, then what that truly means is that the market's new support will end up being down there. But hopefully that's not the case. We'll see how everything kind of plays out with that. If you like what I end up doing, please make sure that you end up clicking on that boost button. Also, make sure that you end up going to all of my other social media platforms and just supporting what's happening with that. I am going to end up presenting our Discord and everything else like that on hopefully by Monday. Still trying to put a lot of stuff into it. Have a lot of very good free stuff that's going to end up involved with it, including some of the bootcamp stuff what we end up doing. Some of the signals that I end up giving. Some extra stuff that we end up placing in, but also it's going to end up having a membership version that will allow you to be able to get a lot of exclusive things that we end up doing that we just simply can't do here on TradingView just because of time. So if you're interested in being able to learn a little bit more about that, make sure that you end up clicking on that private message and sending me a message from there. I end up getting back to you as soon as that message actually is sent. And like always, hopefully everybody ends up having a good trading day. Tomorrow, more than likely, I will probably not look at taking a position. I'll just wait to see how the market kind of reacts, unless there's just something significant that ends up happening. And then after that, we see how everything kind of plays out at 2 o'clock. Hopefully, everybody ends up having a good day. Once again, protect your account. But when you end up having the action to be able to step on that gas pedal, you got to step on it so you can be able to make as much money as you can. Run it up. All right, everybody. Plan your trade your plan. See you later.